Good morning and welcome to our latest virtual roundtable brought to you by Bridging Commercial and kindly sponsored by Roma Finance. Thank you very much for joining us this morning. My name is Beth Fisher. I'm the Publishing Director at MediaNet Publishing. We produce the online titles Bridging Commercial and Development Finance Today and the bi-monthly print Bridging and Commercial magazine. Today, we will be discussing how to secure faster turnaround times in bridging. According to the latest annual EY UK Bridging Market Survey, almost half of the bridging industry is reporting 40 or more days on average for transactions to complete. The report highlighted that a protracted legal process is still the #1 factor contributing to these delays. Other challenges causing operations to slow down include slow borrower and valuation response times, a delay in receipt of information from brokers, unforeseen issues, and working from home restrictions. I'm interested to hear what the panel thinks today about these findings, whether or not they agree, and why delays in valuation, legal and borrower responses are unchanged from the previous year, and if there's anything as an industry we can do about this. Speed has always been the hallmark of the bridging market, but the sector has changed vastly over the past decade. The shift in customer profile and the prominence placed on the exit has meant that packaging and underwriting loans simply takes much longer. Competitive pricing and breadth of choice has also come at the cost of haste. As a result, have the altering USPs of this product resulted in speed moving down the list of necessities? Should we be educating brokers about what bridging is rather than what it was? In an article we wrote in Bridging Commercial magazine around this very topic, we highlighted that every borrower is individual and so are their requirements. Refurb, for example, takes much longer due to its numerous moving parts than a standard acquisition bridge. So we could question whether longer bridging timescales are a result of slower processes by lenders and third parties, or the fact that bridging borrowers no longer need or expect the speed the industry advertised 10 years ago. After all, time is only relevant to the transaction you are being asked to arrange or fund. Over the next hour, we will look at how brokers can have more influence in the speed of bridging transactions when it is indeed a necessity, the panel's top tips for all parties when it comes to making the process efficient and painless, and whether we could see another shift in bridging USPs next year amid the cost of living crisis. Joining me to discuss their own experiences and thoughts on this are a fantastic group of specialist finance experts, who I'll hand over for the next 2 minutes or so to introduce themselves. And I'm going to start with Steve, and I believe my audio has gone a bit funny, so I'll change that up when Steve jumps in.
Hi there, thanks for coming along and watching us all. We're going to talk about speed and bridging and all things bridging development today. I'm Steve Smith, I'm the Sales Director of Roma Finance, a bridging and development funder.
Fantastic, thanks for that, Steve. Can I just check you guys can all hear me better? Apologies for that. Claudine, you're up next.
Yeah, morning everyone. Thanks so much for coming along today. My name is Claudia Reynolds. I am a commercial broker with Blaze Commercial Finance. I tend to look after the northwest area. We cover everything from bridging finance, development finance, commercial mortgages, everything you would expect from a standard commercial bridger broking firm. So yeah, that's ourselves.
Amazing. And Bilal?
Hi everyone, like Claudine and Steve said, thanks for joining us today. My name is Bilal Awan. I'm the head of specialist finance for Express Mortgages. Similar to Claudine, we specialise in bridging, development, second charge, resi, buy to let. So just your standard commercial packager, and it's going to be interested in answering some questions, seeing how bridging's come along in the current industry.
Fantastic. Thank you all guys for joining today, and thank you for everyone who has tuned in live. Just so you know, you can submit questions throughout the next hour for any of our panelists to answer. You can do that in the chat box, which you should be able to find on the right hand side of your screen in the control panel. So you can just drop in your messages, your questions there, and if you've got any issues, please raise your hand and we will try to sort that out for you as we go through the session. So I'm going to start off with a question which hopefully some of you may have heard in my intro, but it's all about the hallmark of bridging, which we have always said has been speed. do we think as a group today that speed is still the hallmark of bridging? Steve, do you want to start us off on that one?
Yeah, by all means. I think you kind of hinted at it yourself at the start. If it is an auction purchase, if it is a vanilla bridge, speed is very, very important still, because people have a date of when they want to complete. If, however, it's a full-on ground-up development or a heavy refurb where there aren't any real staunch dates in mind, it becomes a secondary issue. But I think if you're talking about bridging, I think bridging itself in its purest form, speed is really still very important because we have dates to adhere to. I think that's, in essence, I think the only way it's gone over when we look at these 40 days is because we're putting in those developments and heavy refurbs as well, which obviously do take longer than a typical bridge, which should take 28 days or less. That's my starter for 10.
So really, do you think that the averages, when we talk about kind of industry averages, it's not really proportional of kind of what the market's actually putting together as a standard bridge?
I think because we've expanded that market so much, I mean, sort of 10 years ago, we were literally, certainly at Roma, just doing bridges, doing auction finance bridges, for small amounts, bullet loans, 150,000, 100,000. Whereas now we do also, there are heavy refurbs that can take longer because of the diligence. There is planning to look at in development cases, so things can take longer. I think the point is, what does the customer want? If the customer wants speed to be the most important thing, let's drive towards that speed. If the customer tells us, actually, I just want this transaction done because I'm doing a ground up development of 4 houses, speed isn't so important, but the whole package support is. So I suppose we have to look at it in 2 ways. If it's a pure bridge, I think speed is still probably the most important factor. If it's a development or refurb, there are other factors in play, but it's really down to that borrower, and that's who me as a funder and Claudine and Bilal as the brokers support and represent.
Claudine, would you agree that, and what's your opinion on speed being the number one kind of USP of bridging?
Yeah, so I think it's important for me to define speed. So the industry, I feel like the industry is obsessed with the word speed when you relate it to bridging, and certainly bridging products, and that kind of is pushed by things like 24 hours to fund. You see all the time lenders 24 hours to fund, 48 hours receive the pack, all the way through to funding, etc., etc. Any lender can fund a completed pack ready to go, certificate on title done, valuation done. Literally, it just needs funding. Anybody can do that in 24 hours. I think for me, it's about defining what that speed should be and whether it is critical. And Steve's got a really good point. When there's auction timescales, it's really important. It needs to be done by a certain date. Solicitors are critical in the whole speed and the process of the speed of the process of any bridging transaction. And I think finding a solicitor that's got experience in bridging and has done bridging cases before is crucial in any bridging case, especially where there is a deadline and there is a timescale to be met. I think, so historically, I think Steve's point is right in that historically bridging funding was purely purchase, specifically really set out for auction purchases where speed was of the essence. But I feel like it's kind of morphed its way into other transactions and everything now. If you mention the word bridging, people talk about speed, and it's not necessarily needed or required in every single circumstance. And I think there's so much that sits behind it to make sure it happens within a certain time frame. That's not just speed. Who's shouting? Who's It's not necessarily about that. There's loads of things that go into it to make it a quick transaction. And sometimes lenders don't help themselves by throwing out key things like 24 hours to fund, because it's unrealistic, and it feeds that whole speed bridging world that's not necessarily where it needs to be. That's my thoughts.
Bilal, your opinion on problems that bridging brokers are facing when it comes to speed and delays at the moment. What do you think is holding the market back?
I think it's a combination of factors. So you've got lenders. Now, some lenders are that inatuated that valuation reports just taking to review them are taking more than a week or two. That's a big impact. Because of the rate rises, some of the funders pulling out. You've got lenders in the market right now that they're saying, yes, we've got the money, but in actual fact, their funding lines have dried up because they're backed by, say, American securitization companies. The long and short of it is some lenders don't have the money to do it. So they're getting a whole host of cases through the door, cherry picking the best ones. I'm not saying Roma's like this by any means, they're completely different, but that's a problem as a broker. So the first thing I ask, it's not speed anymore. I ask clients three things. I ask him, all right, so look, you got three options: speed, price, and the ease of the lender, or the certainty of the lender. Which one do you want? And I would say for the last 4 months, it's always been the ease of the lender and where the money's coming from. So to answer your question, let's just say we cement the fact that the lender's got the money there. Solicitors, again, as Claudine highlighted on, we have to be very careful as brokers. We can't say you must use this solicitor. We can only give suggestions to our clients. I've got solicitors who are dealing with a simple auction purchase where we've had notice served. We've had to agree extensions because they can't complete a simple legal pack. And then I've got solicitors and ground up developments who are completing things in about 6-7 days. It's a whole host of things. I think, like Claudia mentioned, instead of everyone being on social media, I'm terrible for this. I don't use LinkedIn. And all I see is great pack submitted, 48-hour turnaround, 24-hour turnaround. The speed's not important. How many times? I'd say between, Steve, Claudine, and myself, we've got about maybe 30, 40 years experience in the industry. How many times as of late, I'm just saying I am a little bit older than I seem, how many times can we honestly state that speed has been that important of a factor in the last year or so? You could count on one hand. I know I could count on one hand. Or otherwise, it's always certainty of funds, how easy the lender is to deal with, the rate. Pricing's a big point. You've got some clients that will pay, they don't care, they'll pay through the nose for stuff, but then you've got more people being price conscientious nowadays. So I think the best thing I can say in this circumstance is it's a combination of factors, Beth. I can't give you one definite answer. I wish I could.
Would you agree that if a borrower did choose speed, like you said, it sounds like this it's less likely, but if they did choose speed, they would have to pay for it?
Yes and no. So, like Roma, you've got the Roma Flow product. That it works very quickly. It's cemented. There's a due process to it. Now, don't get me wrong. I would say it's case specific, because if they bring you a bog standard auction property, there are other brokers messed them around. They've got 5-10 days to complete it. But you go to a lender who's got a product such as Roma Flow Streamline to deal with a situation like that, then you've not really got any concerns. You're going to get your market average, if not a little bit lower than market average. And what it also comes down to is the quality of the broker. I'm a very firm believer in you get what you pay for. And I've got a philosophy in life. We're not cheap. We're not expensive. We're just asking for a bit of commitment. The moment someone pictures a broker, they're thinking, money grabber, they're just going to stick me with the highest finance product. It isn't. You don't ask your plumber to fix your car. That's the same way I see life. So it's going to depend on a case by case.
Claudine, would you agree that from your client base, are you seeing that they are, do you ask them straight up, like Bilal does, what's most important to you for this type of deal? Is it speed, rate, I guess funding, funding issues or funding stability? What are you kind of seeing trends from your clients?
Yeah, absolutely. So I would absolutely ask them what's important. Do they have a drop dead date? Is there a specific completion date that you need to work to? And just like Bilal, the majority of them aren't. Speed is not the key driver. Price is a key driver, and I think again, we've talked a little bit about lenders kind of 24 hours to fund, 48 hours to fund, and I think one of the other things we're seeing at the moment is a lot of headline rates. So clients see headline rates, and that's what clients expect to pay. And I think there's, a lot of a broker's role, certainly in bridging and in other products as well, is a coaching role between, what is a headline rate and what exactly are you likely to end up with. And that coaching role is, you know, to bring them in line with what they're actually going to pay, rather than, you know, what they see on the internet, on LinkedIn, on socials, on, you know, which is supposed to be a marketing tool, which is great, but not from a broker's point of view, because we, you know, with the inside knowledge that we've got, we know that it's highly unlikely that they're going to pay the headline rate that they've seen. And I think that drives sometimes clients coming to a broker, just like Bilal said, you don't choose a plumber to fix your car. I'm gonna keep that one, Bilal, just so you know. I'm gonna try and use it at some point as well. But yeah, you don't, you know, you come to a broker, you don't then come to a broker, take the terms that they offer you and swing it around the marketplace a bit. And I think it's happening more and more because the rates are increasing so much, but clients are seeing the headline rates, so they're expecting to pay headline rates. And I think there's becoming more and more of a job of a broker to kind of coach them to understand exactly what it is that they're likely to pay, as opposed to the headline rates that they see. So I'd say that's probably the biggest driver at the moment, is rate as opposed to speed.
Do you expect that to continue into 2023, as we are kind of, you know, we're in the middle of a cost of living crisis?
Well, I'm not expecting rates to drop, Beth, if I'm honest. So yeah, I expect the conversation to continue, very much so. Yeah, I think it would be, yeah, I think it's just gonna continue. I mean, all we're seeing at the moment is rates increasing. You know, the Bank of England rates are increasing, interest rates are increasing. It's only going to go one way. And I think that coaching role of a broker is becoming more and more relevant and important as we go through, like you say, cost of living crisis, and over the next couple of years. So yeah, I think it's going to be interesting points as we carry on.
Yeah, I completely agree. And, you know, as a publisher, we report daily, you know, new pricing, fixed pricing on bridging, and also changing the pricing going up across all products.
Yeah, my inbox is full daily of lenders pulling products and creating new ones, and, you know, if you don't get this submitted within 24 hours, then you've lost your rate, etc., etc. Probably less so with bridging. I feel that bridging is a little bit more flexible. I feel like the more your fixed rates and your longer term products, it's far more prevalent with at the moment. Bridging seems to be far more flexible. And you know, you might have an offer expiry date, but it's, you know, it's still okay. But certainly with the longer term fixed rate stuff, it's tough to keep track of what you've got and where it is and whether it's going to expire, etc., etc. is hard work at the moment.
I can imagine, and it really emphasizes the, you know, the true power of brokers in this market right now, because they're the ones who are seeing all these changes and know where the market is. Steve, in your opinion, when does a bridging case require a light touch? I know you talked about it a little bit earlier in terms of auction finance, but when would you say it requires a light touch, and when would you say it doesn't?
I think it goes back again to the vanilla true bridging, the one bullet loan. We're going to purchase this, maybe do up to 20% worth of work, so it's a new bathroom, some central heating, whatever. For those property investors that do this regularly, that's a light touch. And the more we know a borrower, the easier it becomes a light touch as well. So again, I think for all of us, it's relationships, isn't it? It's important that the broker has a good relationship with that borrower, so we know the facts, and we have a good relationship with the broker, so the broker understands more and more so in these ever-changing times. Again, what funding lines does a funder have? You know, who are you actually funded by? That's very important. So have those relationships with, and we've worked obviously with Express and Blaze a lot over the last few years, but we've been around a few years and we understand that marketplace. And I think it's important when you look at a light touch, if we know the borrower, it's a lot easier to do a light touch on that. And if it's a very simple transaction, it's a lot easier to do a light touch on that. But if we come up with a brand new borrower who wants a full ground up development, that's not a light touch. That's going to be a full due diligence. We're going to understand what's going on, and that will obviously take longer, as we're talking about speed, than a simple borrower repeat business doing a quick auction purchase. So it's sort of the simpler transaction, and the more we know about the borrower and the more we've used the borrower, the simpler a light touch is, because we've got all the information from the first time round.
To add to that, and I know Bilal was mentioning it earlier with your Roma Flow product, which you launched, I think it was around this time last year, actually in September 2021. That product was obviously introduced to the market to help speed up the application to completion process and make the whole submission process easier for brokers. How, just for anyone who hasn't used it, who is listening in, how does it work, and how much has it actually sped up bridging transaction times for your brokers and their clients?
Yeah, okay. Romaflow it was pretty much a year ago this month, so perfect timing. You've obviously done your research there, Beth. And basically it's that we currently are on 80% of all Romaflow deals are paid out and completed within 28 days. Which was pretty much what we wanted it to do, and that's, you know, we can say some have been done in 5 days, but obviously as Claudine said earlier on there, because we've probably taken them from a funder who didn't want to do that deal, and we've got the solicitors working, we've got the valuation that we're retyping, you know, so there's lots of ways we can get that 5-day work. But importantly, from start to finish, 28 days in bridging is a good time now. We've done that by using technology, so they don't have to send, the broker doesn't have to send us, you know, their ID paper file. We don't have to get proof of address, we don't have bank statements. We can do this by apps of open banking, of Credas, which checks who they are as a customer, and all we need is a signed AIP and a signed application form. So it's a fairly low touch all round. It's then immediately instructed into solicitors within 24 hours. It's immediately instructed with a valuation or an AVM. So you're automatically doing that straight away. Don't get me wrong, you've still got the issues with a valuer here and there that will take longer than others. You've still got solicitors who don't know necessarily what they're doing on the customer side, however you try and get it. So there are some, but we've done 80%, and we're going to be really honest about that. We'd like it, I'd love to have come on and said we've done 100% in 28 days, but it's you always get some that go, you know, things appear in legals that nobody knew about, things appear from a valuation report that nobody knew about. It's just our specialist finance industry that happens in.
Out of interest, I think that's great. They're great figures there, 80%. What's the demand been like by borrowers to go through this process and to use this product?
It's been strong. It's been strong, and again, it's been strong because of our broker database. You know, it's the brokers that understand it as well. Because if your broker understands what a Romaflow case is and what you need, it's obviously a lot easier for that client and the broker to get that to completion. But we're probably doing about 50% of our business is through Romaflow. So we kind of anticipated it would be that, you know, roughly, and we'd hoped it would be that. But looking at a year on, which we've pretty much got in stats now, it's pretty much been static. We had the initial huge surge, obviously, when you launch a product, but it's now about 50% of all business. And to be fair, any, you know, simple vanilla bridge becomes a Romaflow deal. There's no reason why it can't be. So it's done well for us, in especially if you think about COVID, Brexit, and all of the issues that we've had over the last sort of year.
I mean, it definitely correlates with Bilal and Claudine's comments on whether, you know, speed not being the number one USP of bridging. So that kind of correlates with the demand you're seeing. So I feel like Claudine wants to jump in there.
No, sorry, I was just going to say, it's a really interesting point. I think sometimes the word speed can be misinterpreted. It's actually efficiency. What you want is efficiency. You don't, you know, speed isn't. Yeah, I think probably just the words get mixed up. What you want is an efficient lender who's going to do it as quickly as they can, but without, you know, sitting on points and messing about and, you know, not instructing valuers and not instructing solicitors or putting red tape in because once bitten, twice shy, things like that. It's actually what you want is an efficient lender with decent funds. So yeah, I totally agree with all those points. And I've got something going through Romaflow at the moment. It's dead easy. It's just easy to do. So yeah, sorry, just to add that point in.
No worries. I've got a question from the audience, and I think this just kind of relates to one of the questions earlier about what is impacting speed right now. So does the panel agree that land registry delays are becoming more prevalent and impacting bridges? That was to the whole panel, so anyone who wants to answer that one.
So yeah, I think yes and no. In terms of bridging lenders, I'm finding them being that they're very flexible. So long as there's some sort of transfer form, TR1 form that can be shown to prove that it has been purchased and that the charge is being added to land registry, it's not necessarily a deal breaker if it's not on land registry. So long as it can be shown that it will be. It's not been a deal breaker so far with anything I've seen. But yes, delays in land registry are astronomical at the moment.
What is causing the delays right now?
I mean, is it okay to still blame COVID? I think
Yeah.
really we're like 3 years in. I feel like people still blame COVID. You ring call centres and it still says we're experiencing high volumes of calls because of COVID. 3 years in, they really should have got a process for that now. No, I think there's a lot of things. I think people are still working from home. I think people are still juggling kids and home, and I think COVID does still have an impact, but I'm not sure we can be blaming it 3 years in now. What do you think, Steve? What have you seen?
I think people do still blame COVID, which is quite crazy if you think about it. But I think it's a large part of people leaving their jobs during that COVID period, whether they were sort of, they changed direction for whatever reason, wanting to work from home, have kids, go, do all kinds of different things than their actual job that they were doing. And I don't think certain companies, and certainly not government companies like where the Land Registry is, have actually employed people to replace them as such. So there seems to be a bit more of a delay on these things. They say COVID because they won't actually say because we haven't employed the staff that have left. And I think there's a bit of an issue there that I'm finding with a lot of the agencies in councils and governments. But as Claudia said, as long as a funder understands that, we can't wait for that to be done. It's out of our control. As long as we have some form of license where you can see that it's going to happen, there shouldn't stop anything going on. You've got to be we are in an unregulated specialist lending field, so you have to make exceptions to various things. You can't just wait and tick box and do that whole computer says no thing, otherwise you're not going to get anything done realistically in the world that we've had with what's gone on in the last 2-3 years.
Are there any instances where this would, like a delay like this, would impact a bridge?
Only if the funder stated that they absolutely need to have it done. And that, you can't really physically force the Land Registry to do it quicker. They have ways where you can expedite it, but it doesn't really. You can only go as far as when they do it. So, and I think most funders, I'm not sure Claudine and Bilal will tell me different, but I think most funders are taking a sort of pragmatic view and saying we can't force that, so we will accept what we can accept.
Yeah, very much so. That's certainly what I've found. I think, Bethy, the only instance where it might affect is if you can't produce anything to prove that it has been purchased or it's owned under a certain entity. I think that's probably the only way that it would break down for me. Bilal, have you come across any of these at all?
I've only come across, really, it's been funder specific. It's been 2 funders where they're saying irrespective we need it updated, but similar to what you're saying, Claudine, there wasn't really any track record to prove that the transfer TR1 solicitors undertaking something being had occurred. So understandably they're not going to take that risk and lend out that money. So Steve, like you said, it's an unregulated market. There's a lot of money flowing around, there's a lot of volume. You just have to make exceptions. If the rest of the case makes sense, you can authorize who the borrower is, who the solicitor is. There is some form of track record or audit trail. Why would you not lend? That's the kind of thing.
And this just comes back to the types of questions that brokers will be asking lenders from the outset in terms of like, what would you make an exception for, surely?
And I do think it's important from a broker's point of view that you understand your deal. So, if someone's saying to you, I own this building, prove it. We should have that proof before it goes anywhere near a lender. We shouldn't be going to a lender to say, can you lend against this? Only for them to say, well, hang on, Land Registry doesn't show that they own it. That for me, that goes straight back to the broker. That's up to us. That's up to us to prove that before it goes anywhere near a lender. So yeah.
I hope that answered the attendees' question well. I think you guys covered that pretty well. In terms of other features and products from lenders that could help speed things up and also, to Claudine's point, make things more efficient for bridging brokers and their clients. What else are you seeing, or what do you think is missing in the market right now? So this is probably one more for you, Claudine and Bilal.
I think for me, anything that means that the client does less. So anything where the client, so just like Steve said, where we're using Roma Flow and there is open banking, there's CREDAS, straight away that takes away your need for certified documents from a broker, takes away, so your client doesn't have to go and find their passport and their driving license. They don't have to go onto their app and download 3 months worth of banking statements only for them to actually want a printed one from the branch or something ridiculous like that. It takes away all that time that the client has to put into potentially getting it done. All they need is a signed app form and an AIP. Brilliant. And then apps and technology takes over the rest of it. You know, even to the point of desktop vals over physical valuations, things like that, where it's taking away the client's need to do something. That's always going to improve the efficiency / speed of the transaction, without a shadow of a doubt. So yeah, anything where that helps is a massive benefit in terms of speed and efficiency. Bilal, what do you think?
So I just realised I was on mute. I'd have to agree with you, Claudine. At the moment, like one was using Credas, open banking. I think there's two parts here. It's what the lenders can do to simplify the process, to use fintech, to use things that we didn't have available going back, say 4 or 5 years ago, and capitalize on that. But it's also partly the broker's responsibility as well, because everything is changing. My team, I'll always say one thing. I say, look, validify what the client's saying, do your due diligence and package it, then put it in front of a lender. Because if a lender's getting something on the back of a fag packet, come on, can they really fund £500,000 deal? But if you're giving them a full dossier of information, some brokers are different. Some of them they'll flog whatever and hope it sticks. Some are quite precise. But using a combination of fintech and common sense on all respective parties, I don't see why it wouldn't be easier. That's where I stand in the current market.
Steve, how will Roma be introducing more fintech innovations over the next 12 months or so? What have you got up your sleeve?
Yeah, well, I think coming on the back of RomaFlow, which worked really well with Credas and open banking, using that, we've also just started using solicitors who aren't the most fintech-based people as we know. They can be quite old school in how they do things, but we've got some of their solicitors actually going now that they can actually take DocuSign documents, which is brilliant because, again, I know it's these things. So we've got that signed up now, so that's about to come out. And we're looking at a proper desktop valuation, because I still think AVM is fine, it works, but we all use Home Tracker, which isn't the greatest for a lot of companies, full stop, and we all use that. So I think there is room for a proper desktop valuation approach out there, and we're working with VAS, and they're looking at one at the moment, and we're looking at how that can work properly for Roma. So if we can get a proper desktop valuation that is far more ambitious in getting an accurate description of something and being comfortable with that as an accurate sort of valuation, that will speed things up immensely. Because we've seen, you've only got to have holidays, haven't you, in August, and suddenly valuations take 2-3 weeks instead of 2-3 days, and solicitors, they're on holiday, they can't possibly do anything. It's like, doesn't anybody look after their work when they're away? And apparently, no, not when they're working from home. So, we've got to look at all these things. And I think any little fintech approach is really important, because it just gives you that advantage over what is a very competitive market. Every time you open a magazine in finance or anything from MediaNet Publishing, you will see hundreds of funders out there in bridging the development world. And it's how we actually stand out and get that relationship with our brokers that we can do something different. We're always trying to push that envelope to do something quicker, hence this conversation, but also more efficiently, which I think is probably the byword, really, Claudine, for this day. So yeah, so there are things coming out, there are things happening.
I'm going to take that, Steve. I reckon I think it's quite a tough industry for lenders at the moment, certainly in the bridging world. I feel like I probably reckon there's about 450 bridging lenders out there, easy, at the moment. And I think a lot of bridging lenders set out with this ethos that it was human underwriting. So, it's not a computer. The computer's not going to say no. We're not these big agencies where your pack's going to come in and it's going to go through a computer and it's going to say no. But with that comes a human touch and a human element and a process. And that process can be elongated by all sorts of stuff. But I think the lenders that are going to come out the front, just like Steve's saying, are those that are going to be able to innovate and use technology to enhance the process, as opposed to those that stick with the entire human process right from the very start, because those are the ones that will take longer and longer and longer, because they'll add bits in, and it will be, you know, oh, we need to do this bit at this stage because this has happened at some point. Whereas I think Roma have really kind of flipped that on its head, and I think the lenders that will step forward will be those ones that add technology into that process to make it quicker, that still keep the human element, because the human element of bridging is massive, but I think to add technology to that is just going to be hugely beneficial. And for me, Roma do a lot of mine because I see them using that technology and using it to make the process better. So yeah, I think tough industry, but I feel like technology is helping at the moment. Definitely.
100%. I highlighted at the beginning, although I'm not sure if anyone could hear, but the legals of obviously are still the number one cause of protracted bridging times. In terms of electronic signatures, which I know is something which not everyone does, are we seeing more solicitors and lenders accepting electronic signatures, and is this speeding things up?
Yeah, I would say so. I can't tell you. I've lost all my hair over the years because people have needed physical signatures. There's been quite a steady increase in lenders that will accept. I've had a few cases where clients have been abroad on holiday. You know, we're kind of getting out of COVID. More people are going abroad. And if someone's gone away for a week and a half, you can't wait for a week and a half for them to fly back to the UK, sign one piece of paperwork. But yeah, you know, Claudine, what are your thoughts?
Yeah, I totally agree with you, Bilal. I think during COVID, lenders and clients had to pivot because it was all wet signatures prior to that. Whereas suddenly, you know, nobody had a printer at home. No one was able to print, sign, scan back. So electronic signatures just kind of became more the norm. And I feel like over the last 6 months or so, it's just increased more and more and more. We use electronic signatures, we're comfortable with them, and lenders are becoming more so. And I think it's important for brokers as well to keep trying, because, you know, I'll always get something electronically signed by a client. I'll send it to a lender and I'll say, look, here's the electronically signed version. If you absolutely need a wet signed, you know, I can go and ask for it. But if you're comfortable with an electronic signature, here it is. And, you know, more and more now they are accepting of electronic signatures. And again, just another thing that's going to improve efficiency, which will improve the overall funding timescales. So yeah, more and more becoming accepting of it. Solicitors way further down the line. I feel like they're still miles off accepting that kind of stuff. So yeah, I don't know. Do you agree, Steve?
Yeah, we had to find solicitors that would accept it. We had to really go out and look for solicitors, because our normal panel, they weren't going to. So we've actually put 3 new solicitors on our panel that will accept electronic signatures. Yeah, but we had to do that, which we didn't think we would. We thought a typical conversation with a very well-known financial legal firm saying we wanted to do this, and they were like, oh no, I'm not going to do that. So again, you know, but we know that solicitors are traditionally not in favour of fintech, shall we say. They are sort of one of those industries that have done things in their own way and have been able to. So it is about going out there and challenging. It's about always, it's sort of, you know, we need to do this. We saw other competitors starting to do it. It's like, well, they can do it, we must be able to do this. It seems absolutely in our benefit for us, the borrowers and the brokers, to get this done. So we've gone out and done it. But I think you do, it's an interesting industry because it is a big market, specialist industry, but it is so different from, you know, broker to broker, from borrower to borrower, from funder to funder. There are so many things, and it comes back to the relationships. For me, it comes back to, if you've got a good relationship between broker and funder, and we trust what the broker says is absolutely true, they trust that we're going to fund it in a good, achievable time, you've kind of got most of things covered for that borrower. If one of those isn't broken, if we're looking at a broker going, I don't actually believe this is true, or I don't actually think this is accurate, or this isn't the full story, there's then more questions through underwriting. And again, for the broker, if they think, well, actually, have you got the funds? You know, is your funding line in place? Why is it taking so long to go through legals? It's very easy to blame the solicitor, but actually let's get some facts about that. You know, is it the solicitor holding that, or is it just we're waiting for the last Friday of the month to be able to pay this out? And all these things become play. And so you have to look at it and have those relationships in place for the borrower, really.
What other tried and tested tips and tricks can you all give today's listeners to help them increase efficiency? I think that's probably the key word here, rather than just turnaround times. But yeah, how can we help increase efficiency? And this can also be some additional tips for other, third parties in the transaction chain.
So I think for me, I've got three things written down from having a look at this question to start off with. The first one is know your deal. So know what it is, know who your borrower is, know the property, know the background, know what they want to do, have an idea of whether it all works. Look at comparables, know your deal. I would expect a lender to be able to phone a broker and for them to be able to answer the question. As opposed to them need to speak to the borrower first. So know your deal. Decent solicitors, just unbelievably important in any kind of specialist funding deal. And again, relationships with your solicitors. So, like Bilal said, we can't recommend, we're not allowed to recommend, but I have a number of solicitors who I have a great relationship with, who I can pick the phone up and say, look, where is this case? What's holding it up? Tell me about it. Is the borrower not coming in? Have they not signed stuff? Is it the lender? What is it that, where is the hold up? So know your deal, decent solicitors, and a motivated buyer. So I had a bridging transaction, no val, that we instructed in November that completed last month. That's crazy. Nothing to do with the solicitors, nothing to do with the lender, all to do with the borrower. Just not a motivated borrower. And I think if you get those three things, so know your deal, decent solicitors, and a motivated buyer, it'll fly through. Anything that breaks in any of those pieces, and it's going to take longer, without a shadow of a doubt. What about you, Bilal?
I think you stole my answers, to be honest with you. And another part I'd like to say is learn when to say no. So now this is an interesting one. I've taught my guys to be selective on the business that they do because, Claudine, like you mentioned, we've got excellent relationships with solicitors, with lenders. And the key thing is I say, look, there might be 400 or so bridging lenders, but how many brokers are there? There's probably 10 times that amount. You need to do something that will separate yourself from most of the people. And what we tend to do is, and now this is where you have to be very, very careful, because you want to ensure you're not a conflict of interest. Normally, depending on the borrower, if we know, all right, they're an all right borrower, they're decent people, you can have a conversation with them and they're not the ones that tend to throw you underneath the bus every time. Speak with the vendor, speak with the estate agent, speak with the seller solicitor, speak with your solicitor. It's like a game of chess. You're moving the pieces and you're working out the strategy. I cannot tell you the amount of times where, I'll give you a perfect example. I've got a very large deal going through at the moment. Buyers pulled out at the last second. Whatever's happened, the buyers pulled out. We've had the funds ready. The vendor's underneath a lot of pressure, but from the start of this, me and the team, we've been on the phone to the vendor's lender. There's a right of repossession going through. So when I say he's defaulting, it's quite far down the line. We've got both the lenders on, and we've just had a Zoom call with the vendor, and I've said, look, guys, we've got the money ready. We just need a borrower. We've got enough trust between everyone here to accomplish a similar goal. Let's just hold our horses a bit. Give it 2 weeks. I'll find you another borrower. I did that yesterday. We're just picking up where we left on. And I think a lot of it that people don't really have nowadays, and pardon me, I might offend a few people here, is common sense. Would you give your money to that person? If you can say that, like Claudine mentioned, and Claudine, you made some very fantastic points, it's the chain, it's knowing the borrower, understanding it so that you can act as a true representative for the borrower in front of the lender. If you can't do that, then what's the point? Well, that's the way I think we can really speed things along. A large ownership of it is on the part of the broker and the way that they work.
Steve, would you agree with that? And do you have any additional tips for brokers and their clients?
I think it is the know your customer, isn't it? It's just, if I can talk to a broker about a customer, because with our world, a valuation might go wrong, something might come up, something comes up at legals. We need to have a plan B. We need to look at it and still want to do that deal for that borrower because we like that deal. But it could be that it's not that property, but we can still hold it, go and find another property because this one is wrong. You know, we're still going to do the deal for that borrower, but just have a plan B in place a lot of the time. It's not all straightforward. I would love to be able to say every deal we do is absolutely straightforward. They're not. You know, things come out of the woodwork. We're human. And I think, you know, there are properties that people shouldn't buy after they've had a valuation or a structural engineer's report. And we should be able to say that to people. You know, you're going to lose money if you carry on down this track. I don't want you to do that. But equally, it's not you. We're happy with you as the borrower. We just need you to pick a different property. And I think you have to have those discussions. As Bill said, you can say no. You know, and from a funder's point of view, there's 400, 500 funders out there. If I don't want to do a deal for whatever reason, it just doesn't suit us. We're not specialists in that particular area. Just say it very quickly to the broker. They've got many other options. But equally, what you should never do, and I was a broker for 7 years, and it happened to me many times, is as a funder, you go, yes, 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 yes. Oh, no. That's the worst thing you can do for anybody. It's like, if it's a no, tell the broker a no. It's fine. It happens. We're not all things to all men. But equally, you find a funder that if they do like the deal, they'll stick with that deal, so that AIP stays the same. It doesn't change. You know, we don't go through all these pros. It doesn't change LTV. It doesn't change rate at the last minute. All of these things, because it's frustrating for all. Just be really honest right from the start. So for me, a customer, be honest to your broker. I'd rather see the bad point and put it to an underwriter than find it when the underwriter tells me there's a bad point. You know, those kind of things don't help. It doesn't make that underwriter then confident of that case because they found the problem. So the salesman, BDM, one of my team, whoever, and the broker hasn't informed them. So they're taking the view that, oh, this was hidden from me, which, you know, the broker or BDM might not have known. The borrower may never have told them, but it's all about that. Back to the relationships bit. Be honest. If we know the problems and 9 things are great and 1 thing is wrong, of course we'll do the deal. It's absolutely fine. It's just if they find 7 other things that are wrong, it becomes more of a problem.
I think you hit the nail on the head there, Steve. You know, this market is definitely built upon trust and relationships, and that's a huge part of bridging. So yeah, if you don't have that, you are going to face issues. So just a reminder to everyone, we've got 10 minutes or so left for questions. So any additional questions, do submit them now. We'll hopefully get round to them. I've got a couple here, which I just want to start with, but if there's any other questions anyone has, please do submit them. So this one is, what are the biggest misconceptions in the bridging market right now, and how is this hindering speed? Steve, do you want to potentially start us off on that one?
Yeah, biggest misconceptions of bridging right now. I suppose the biggest misconception of bridging is that if you don't know bridging, it's always expensive. That's what people say. It's an expensive option. And it can be if you want to do a bridge for 24 months when you don't need to, that is expensive. But it's a need. It's a need for a solution, really. So if you're doing a bridge and you need to flip something and put in central heating, a 3-4 month bridge, it's not expensive. You know, it's going to cost you 3 or 4% in interest. So I think the biggest misconception is probably it's expensive, full stop. It can be, you know, do your homework, make sure you can do things as quickly as possible, and again, as efficiently as possible, Claudine. It works on every level. It works efficiently, but I think, you know, if you're looking at that, so I think there's a misconception there, which I think has always been there, really. You know, it can be expensive. It doesn't always have to be expensive. And it is a requirement and a need to get you to a certain place, and probably and hopefully to make a lot of money doing that. So it is sort of a necessity in that situation. I think other sort of misconceptions at the moment is probably that it's taking longer, you know, as a whole across the board. But I think we kind of touched that right at the start of it, where it's probably because we're doing a lot more detailed development bridges now that get thrown into that same pot. So I don't think an actual auction purchase bridge is getting longer, particularly. I mean, I've been doing it 12, 13 years now. It hasn't really changed much at all. If anything, we're getting quicker at it by using technology. But I don't think it's getting longer. But equally, because we're doing much more advanced, multi-million-pound deals that are ground up, or heavy refurbs, or changing churches into apartments, or whatever we're doing. It's not a simple bridge. So it suddenly becomes, that does take 60, even 90 days, you know, to do, and suddenly it takes your average so much longer in the equation. So I think there's a couple of misconceptions really about speed, really, and also price. I would say they're the two biggest ones that I come across mostly, and sort of, you know, as I'm driving up and down the country speaking to people.
We have another question here. Have any of you noticed lenders adding hidden redemption fees? I challenged a lender the other day on this, and they hadn't disclosed certain fees on the original facility. And if I hadn't flagged, the client would have paid an additional 5K. Thoughts?
Never
Thoughts
seen
on
it.
using that lender again. Who? But no, I can't say I've ever seen that. That's ridiculous. But again, like we've touched on throughout the whole of this webinar, it's all about relationships. If you've got a relationship with your lender, then there wouldn't be any hidden charges. That's horrendous. No, I can't say I've seen that, and no, I don't like that at all. Bilal, have you?
I've never seen anything like that for as long as I've been in the industry. But the one thing I can say is I've made this mistake once before. When looking at redemption figures, what I've taken into consideration, I've assumed, and this is my mistake, I'll hold my hands up, no one's perfect, if the facility was repaid earlier, I was under the basis it'd be a daily redemption figure, but it's actually a monthly redemption figure. So if we're talking a 7-figure sum here, you know, 5K might only be the last week of the month. So that's the only way I can see it happening. But if they've unnecessarily said, yeah, we're going to charge you 5K, it's hidden in line 3 on page 42, then I would not be using that lender at all.
Is it? I'm just wondering whether it was a redemption figure or whether it was an automatic renewal. So you know, when it goes over the term, there are some lenders that are a little bit unscrupulous, shall we say, and add in a certain fee for it going past the renewal date, having not been redeemed. So I've definitely not seen it as a redemption fee, but I definitely have known lenders put a renewal fee on there that can be quite hefty. But that's all in the legal pack. So solicitors should be shouting that out. And you know, as a broker, pretty much which lenders do that. So yeah, never seen that on a redemption though.
They said it was redemption. They were adding on for a second charge bridge. And this was a new lender, and they were very shocked.
They'd be on my lender dead list.
There you go. That's a warning to lenders. Another question I've just come through. As a broker, would you pick the relationship you have with the lender over a better rate with another lender?
I would
Yes.
always call out, I'd always call out the deals that I've done with lenders and how easy it's been and how the relationship is. Because sometimes a relationship with a lender can make things far more efficient. If you've got a great relationship with underwriters at lenders and you can talk to them and move that case forward easily, that's going to be it's going to be far more beneficial for the client. So I'd never recommend, but I would always talk to the client about the ease of using lenders without a shadow of a doubt. Yeah.
I follow a similar mentality as yourself, Claudine. I'm very straightforward with clients. I just say, look, your average market price is going to be this. Your best 5 options are these 5 lenders. And you know what? I think a lot of brokers, and the one thing I've realized I've won a lot of business over, is because this whole cloak and dagger approach. Just be transparent with your borrowers, with your clients, because if they're going to do business with you, it doesn't matter whether you tell them the lender, the name, or the price. They're going to come back to you. And I don't know, maybe it's me, maybe I'm old-fashioned, but it works from my perspective. And I'll give you an example. We've had one recently. 3 lenders could have done the deal. 2 of them were significantly cheaper. The third was more expensive. But I said, look, yes, the third's more expensive. However, I've got this relationship with them. They are this much quicker. It's your choice. I'll take you with a cheaper one, but your time frame is going to be X amount of time based on this many years experience. So, you know, it's your decision. And I feel as much as we are the experts in the industry, sometimes giving someone the due respect and just saying, okay, Mr. Client, this is what we're thinking. You know, what do you feel? It's your bridge. You're buying it. It's your money. Are you comfortable with that? And 9 times out of 10, they'll have an honest conversation with you. Treat a client both as a professional and a friend. People call me crazy, so I'm just going to be quiet now. But I think it works. That's why we've got a good relationship with Roma. Funnily enough, I've actually met Claudine before. We had a conversation following on from last week, and as a broker, you can tell when another individual has actually got the best interest of the client at heart. And safe to say, I'm very proud to have this opportunity to speak with the likes of Steve, Beth, yourself, and Claudine. Even though I am the better broker, Claudine. No offense.
Beth, are you muted?
Sorry. Wow, it's been 2 years and I'm still not getting used to this. I was just saying, Bilal, I think you've answered this question, but I had a follow-up from that same person saying, do you give all the options to the clients? But I think you've pretty much said yes to that. Okay, one final question. What can brokers who are new to the specialist finance market, especially bridging, do to have more influence in a bridging transaction?
When you're speaking with your BDM, get a packaging guide. So let's just say that they're going to use your normal tier 1 lenders. Speak with your BDM and say, look, I'm new to this. Just be honest. I want to make sure that the pack we're getting across to you is the best thing. Can you kind of give me an application guide? Most lenders will actually have one. It's normally used to underwrite it. When I get a new start, I just give them that. I say, look, package a case, call the BDM. And it's just about being polite. Now, Steve, I think this probably reflects to yourself. How many brokers have you had on the phone who are saying, we want you to do this, we want you to do this? Whereas you'll probably get someone a little bit newer, a little bit more green, and they're very polite, apologetic. You kind of think, I don't mind giving this person 5 minutes of my day. So it's just be polite. It's not going to hurt you. Ask for an underwriting guide. Understand the basic concept. Use things like, I mentioned a couple of things. Property data, it's absolute goldmine. It costs you £47 a month. It'll let you do your comparables, look at sold data like Claudine was mentioning before. You can use stuff like that. If you're stuck for lenders, look at comparisons. I'm not going to mention any names here, but literally type in comparison bridging websites and it'll give you like the top 20, 30 lenders and just start calling. I think that's the best thing you can do when you're starting out in the industry.
Awesome, thanks for that. We have 2 more minutes, so I am going to kindly bring this event to a close. Any additional questions I will send around to the panel, but thank you for everyone who did submit their questions, and anything else potentially around that redemption fee question. I'd be interested to follow up on that, so please drop me a message at beth@medianet.co.uk and we can have a conversation. But thank you very much to Roma Finance for partnering with us on today's event, and thank you to our expert panel for taking the time out of your busy schedules to be here. And I also want to thank you, our audience, for joining us. We will be publishing this roundtable in full next week on bridging and commercial for those who weren't able to make today's events, and also for those of you who just want to catch up on some of the points that were made. If you enjoyed this one, please do check out our virtual roundtable calendar for the year on B&C and DFT, our sister publication, where we are holding events throughout the rest of the year. Also, if you would like to receive a copy of the next print Bridging and Commercial magazine, which focuses entirely on ESG, please remember to subscribe on our website. I have given the link in the box. Have a fantastic afternoon, and we hope to see more of you in person soon.